Good morning, everyone. Welcome to the Ankerstar Wealth Morning Show. I'm Steve Ankerstar, your host. Today, we're going to be talking about three things. We're going to talk about the bounce in crypto after the big fallout from the FTX debacle. Yes, it's a train wreck. I can't stop reading about it and stuff. I have to look away like I have other things to do. But I can't wait for the movie and the book and all that's going to come out of this because it is that bad. It's kind of ridiculous. So it'll be fun to see how all that plays out. Of course, sympathizing with those that lost money in it. Obviously, high risk, but real people losing real money in this thing too. So we'll talk about the bounce in crypto and whether or not, I'll give you my take on whether or not this is a good entry point or not. But we'll talk about Home Depot earnings. They beat top and bottom line this morning. Talk about how that's overall affecting the market. And then lastly, we'll talk about more of a financial planning topic, which is, what sort of net worth, what's the average and median net worth in the U.S. by age. And again, it's not a competition, but we can certainly, look at those numbers and kind of see where you are in relation to that, and kind of a thought piece for either yourself or you and your spouse or family to kind of talk about, hey, well, are we on track? Are we not on track? What do we need to do? Before we begin, though, as a reminder, the financial education presentation should not be construed as personal financial advice. The full disclaimer information is available at ankerstarwealth.com. Now let's get started. Let's take a look at the futures. The futures are up. Two things. We had a nice beat in the retailer space. We talked about this yesterday, but Home Depot started us off with this nice top and bottom line beat. We'll talk more about that in a second. But we just got another inflation number right here at 7:30 Central. Excuse me. That's showing inflation is slowing again. So we were already in the green as far as the futures, and we're getting greener, if you will, while that number gets kind of digested. So overall, that is good. But let's talk about crypto and the bounce. The FTX fallout, Kathy Wood, ARK Invest, you see down here buying more crypto assets. So here's my take, and let's click over on the crypto tab. So everything's in the green in the crypto world. So not saying you should or shouldn't, because that's a personal decision. And if you do, it should be high, an amount that is not big enough to be financially devastating if you're wrong and it does go to zero, because it could. But if you invest in the space, is now kind of a good time to invest. Well, whenever, whether it's a stock or bond or whatever it is, whenever you have a significant event like the FTX fallout and things crash, that's generally a good time to pick up whatever the underlying asset is, to buy it, right? If you believe. If you don't believe, stay away. Charlie Munger was just on CNBC. I had to finally mute him because I was cracking up too much. Wretched, excess, made for kidnappers. He's kind of doing some old guy speak. But I think, if you believe in Bitcoin or Ethereum or any of these other things, have a thesis, believe in your thesis, and then buy some. So the question becomes, is now a good point? I don't think you're going to get much of a better one if this thing has long-term viability. So here's a 1-year chart on Bitcoin. So there you are, right? We could go down here to key stats. Well, it doesn't have any, right? It's a currency. So it's like, is a dollar a good buy today, right? So you're in that kind of math. So if you don't have your head around it, stay away from it. If you do and you want to buy in, gosh, that looks like a fantastic chart for whatever the asset is, right? When something sells off that hard. You look at the others, Ethereum, I think, was even worse yesterday. I think it was down 78% on the year, bouncing 5% this morning. Not cooperating on, there it is. There's the chart. So, yeah. So, you don't know. It had a lows back in here, and it's kind of back in the vicinity of those lows. Again, manage your position size appropriately. But Kathy Wood is buying, so some people are like, that's the biggest reason I know to sell. It makes me chuckle. Take the SARK, which is the ARK Invest fund, if you're familiar. Other fallout that we that we have seen is there's a lot of course, Washington is distancing and all the standard political stuff. But from an interesting point that kind of, Rick Edelman, legendary investor, stepped away from whatever he used to run, which I can't even remember. Now he's the chairman of the digital asset something or other. Kind of threw spears at regulators like, well, if anything, this is a good sign, and that means the space needs more regulation, and that regulators are late to the dance here and they should have been in early. Do not blame. When I was in the military, it's like you never blame Intel, right? You just don't as an operator, right? You take the intel you have, you go forth with the mission, it succeeds or fails, but you don't come back and blame intel. That is just a cop out. So I think it's a cop out that he's blaming that regulators should have been in front of this and maybe could have prevented it. Nope, sorry, don't buy that argument at all. But I do think that we are going to see a lot more regulation in the space coming soon. FINRA put out a blurb, and I haven't quite digested it, but actually this video may fall under it, that everybody has to now report any crypto related messages or marketing materials they put out. So I don't know. I may have to do something special with this video, but we'll see. Whatever, I'll follow whatever rules come out of this. But again, to protect the consumer from the crypto space. So I don't know. This was obviously a bad company and some bad people doing some bad things. I don't think we always need to rely on a regulation to keep us safe. I think you need to be kind of do your own diligence sort of thing. So my personal take. All right, that's enough on the crypto bounce. If you want some and you think long term, yeah, I don't have any problem loading up here again within reason compared to your overall net worth. All right, let's talk about Home Depot real quick. Home Depot is obviously a staple of society. And Lowe's, you can make an argument. I think Home Depot is a better company myself, but I do invest in both on the books, full disclosure. Yeah, people love working on their house. It's a nice, friendly place. It's fun. There's always something to do, right? If you go into Home Depot, you pick up a bunch of stuff to come home and do your home project. Also, potentially a catalyst because of the mortgage interest rates being higher, meaning mortgage rates are higher, which means houses are more expensive, which means less people moving, which means more people investing time and energy into their house that they're currently in. It's a thesis. I don't know if that's going to be big enough nationwide to move the needle or not, but it's certainly an interesting theory, right? So beating top and bottom lines, it's about flat as far as how it's reacted, and they confirmed their forward guidance. So again, not really changing anything up or down based off of the pending recession, the soft landing, hard landing, whatever. They're like, we're tracking and we're going to stay tracking. So overall, that's good. As far as looking at the actual chart, pull it up here real quick. Check it out. It's sold off like anything else. So pull up the 1 year. And, here we are. It has bounced some in this recent uptick we've had in the past 3 or 4 days. But really, you get into, PE ratios in the teens. That's attractive, right? It's got a couple per 2.5% dividend. That's attractive, right? So you get some cash flow out of your holdings. So it's down 26% on the year. That's not really, a huge nosedive. But when you look at the chart, yep, couple, triple bottom here, kind of along with the rest of the market here, and here. Overall, chart looks pretty good. I don't know if it's your thing. You can add some to your portfolio. Certainly, if you have it, I would not sell it here, right? It's a long-term, in my mind, best of breed holding. Okay, enough on Home Depot. Let's talk about average net worth. The first thing I have to say again is it is not a competition, and I do help people with this because people can struggle with money and their relationship with it. And there was a comment the other day, and I can't remember who said it, but I'm going to start using it because they said money above a certain amount becomes meaningless. And I think that's true. And that's a different amount for everybody, right? So I like to say that, middle class kind of guy growing up, got him, invested early. Obviously, that's kind of changed my, financial situation by the fact that I started in my teens. But I'm not anywhere near what I would call that number. But I think, if you start, the $1 billion lottery we had the other day, if what's the difference between 50 million and 300 million? I'm not sure there's a lifestyle change there. Anyway, yeah, just a thought piece to think about. But most people aren't ever going to hit that number, but you manage the numbers that you have. But I do think those that have come into some money, whether, inheritance, equity events, crypto blew up to the high side and they got out before the big crash, right? Whatever it is. If you, you can get competitive and it can become an ego thing. And of course, anything in life, coming from an egocentric, fighter pilot background, but I would say it's actually anything but. It seems like ego, but it's not. It's just confidence. And if you have an ego, then that can get you killed. Well, same thing financially. If you have an ego, you can do really dumb stuff if you're just competing with other people that don't even know that you're competing with them, right? It's like, really? Oh, cool. Yeah, you do you, right? So it's the you should take care of, financial situation, get to a place where you can take care of yourself and your family. Beyond that, it's up to you. It's okay to want to be rich and want to have more. But probably need to think about like why and what you're doing, that sort of thing. So let's take a look at the numbers here real quick. Probably can make these a little bigger for you. Let's go. Here we go. All right. Slide them up here. So these are the U.S. averages. Again, this was done back in 2020. Was when they collected this data. A little bit of stat class. There's median and average. So average, you take all of them put together, divide by the total number in, and that's your average. Median is you line them all up, pick the one in the middle, right? So median tends to tell a bit better picture because it gets rid of the big outliers. So the outliers in net worth are, the billionaires, right? So that kind of throws things off. So really, when you're less than 35 years old, up in the thousands. Once you get to 35 to 45, average net worth, I'm like, that's higher than I thought it would be. For up to 400,000 or so, get up around 50. It's like, yeah, you're closing in on $1 million. I do believe that. Seems about on par, honestly, what I see on average. 55, start closing in on retirement over $1 million. Yeah, kind of, and people joke and say $1 million isn't what it used to. Well, if you have $1 million and you invest it at 5%, which you can do through either dividends or bonds or, real estate investment trust, you can do things with a portfolio. So it kicks off a 5% yield, meaning you can actually put that right in your bank account on a monthly basis. So for every $1 million at 5%, that's 50,000 a year. So think of it really, 4,000 a month. Most of us think in months, monthly terms, because that's how our bills come. So think, 4,000 a month or so, that's 40,000 a year. Coming in. So if you got 2 million, that's 80,000, and you tack on Social Security on top of that. So that's kind of the math that you're doing. So this is about right. Most people have around that $1 million or over around retirement age, and then it kind of holds steady while they're in retirement, and then it starts dropping towards later on because you don't need to die with $1 million, right? Or 10 or whatever. So people later in life start thinking about what they want to do with their money. Whether it's supporting charities or passing it down to families. There's ways to do that while you're still alive that are very tax efficient. So talk to somebody if you're interested and learn how to do that. But overall, I think these are, this is the averages, right? So people that work with financial advisors or listen to financial, shows like this one are probably doing better than these averages, to be honest, or you're taking the steps to get there. I think it's more the way I view it when I talk to folks is I think of it in terms of your salary. So if you're a college graduate that goes on to, a 6-figure type job out of college and then spends most of your working career in that 100 to 200,000 range, then your retirement's kind of based off of that sort of lifestyle. If you're a sales exec or, doctor, lawyer or something that maybe is commanding a $300,000 to $500,000 salary, well, that's a different lifestyle that you've gotten used to. So therefore, to maintain that lifestyle in retirement, you need more money. So I like to think of it as multiples of your kind of average income. If you, are a teacher and you're making, it's different everywhere, but, 50, 60,000 a year, and you do that for several years and maybe, you have some form of pension from the TRS or something. So you've gotten used to that lifestyle. So you don't need as much money because you probably don't have the $1.8 million house. Probably have a nice $400,000 house, right? So it's kind of a multiple of what you're used to in your lifestyle. But anyhow, thought piece for you all. Discuss that with your spouse if you have one, to kind of get on the same page about how much is enough, that sort of thing. But these are the U.S. averages. All right, that's all I have for you today. Thank you so much for your questions. You guys submit through social media and directly through our email. That's all we have for today's show. I'm Steve Ankerstar, and thank you so much for listening in. We'll see you next time. Bye.